today on the Tearsheet podcast.
So that really kind of lit the fuse, so to speak, and helped me envision what we really need to do is to set up a separate brand, a separate laboratory, so to speak, where we can do business in this digital environment, learn how to do it, and then migrate it to the older side of the bank and use those technologies to improve efficiencies and change.
Welcome to the Tearsheet podcast. I'm Zack Miller. Today we have the two winners of Tearsheet's Bank Fintech Partnership Award for Digital Transformation, Midwest BankCentre and MANTL. We're joined by NBC's president and CFO, Dale Oberkfell, and Nathaniel Harley, CEO and co-founder of MANTL. We talk about the collaboration between the two firms on Rising Bank, a new digital brand launched by NBC along with MANTL. The company hit its one-year deposit savings goals within 5 months, and both parties are continuing to pursue the benefits of partnership to go deeper. Here's our show.
I'm Dale Oberkfell. I live in St. Louis. I've lived in St. Louis my entire life. Always worked either for a bank, in a bank, or as a CPA for a bank. And so I started in banking in 1978. And I've had just about every role possible in a financial institution. And I would say our efforts in this regard are really just delivering the same services banks have done over the years, just faster and without person-to-person activity directly.
Great. And Nathaniel, can you introduce yourself?
Yes, definitely. Hi, I'm Nathaniel. I'm the CEO and co-founder of MANTL, and my background, started my career in investment banking, working on equity offerings for regional and community banks, and as well as some technology IPOs. Then started a company in the food media space, which ended up exiting to Food Network, and really wanted to just combine my two experiences, which led to forming MANTL. And really what we set out to do at the very beginning was build our own challenger bank. But really what we realized was the bigger opportunity was helping existing banks modernize. So, our goal and sort of our ethos is really just helping level the playing field for community banks and credit unions by helping them become more efficient and better meet their customer expectations.
Awesome. And the reason you guys are here, Dale, from Midwest BankCentre and Nathaniel from MANTL, you guys both won our inaugural Bank Fintech Partnership Award, specifically for digital transformation. I want to ask you, Dale, can you start talking about Midwest's process in terms of embracing that transition to digital?
Sure. That effort started probably 3 years ago. I went to a KPMG meeting, and they had a consultant from Amsterdam who was actually talking about manufacturing change, how they make change in the manufacturing side of the world, and he discussed two different types of change, and one of them was standing up a whole new manufacturing environment with all new technologies and so on. And that forces the change because you all have new processes and so on. The old or the slower change is to try to make that change in place, and it takes time, and it's really hard to do because you've got people who put up roadblocks, technology that may be a challenge at times, and so that really kind of lit the fuse, so to speak, and helped me envision what we really need to do is to set up a separate brand, a separate laboratory, so to speak, where we can do business in this digital environment, learn how to do it, and then migrate it to the older side of the bank and use those technologies to improve efficiencies and change. And so that's really kind of what started it. And then time was on our side as far as certain technologies appearing that, okay, now we can use this to plug in to our core processor, which is Jack Henry, and then we met an individual from a consultant that we used, which is Expert Savers, who we started talking with about how to do this, and um, and and they introduced us to MANTL, which was a great introduction, and so that's where our discussion started with the MANTL team, and so we started very aggressively working on this project in late May, June of 2018, and then rolled out this new experience in February of 2019. So it goes back a ways, but it really accelerated as we started identifying our vendors like MANTL, who added additional momentum to our effort in this process.
And over to you, Nathaniel. You mentioned like you sort of, MANTL's roots were in creating your own challenger bank before you started to sort of pivot to helping banks, go digital. What were some of your first impressions of the nature and scope of this project?
Yeah, so when we first met Dale and NBC, we were actually really excited for a number of reasons. They were thinking about their digital branch in exactly the right way. And the strategy that they wanted to take when we first met them was basically stand up this digital only brand as a complement to their 113-year-old community bank brand that, existed already in Missouri. And we felt like that was a super exciting opportunity for us because it allowed them to sort of jump into this digital branch environment and upgrade their legacy bank and really build that competency without necessarily needing to fully, reinvent their legacy bank and brand at the time. So the other thing that was also, I think just very exciting for us was they came to the project with very clear objectives. And oftentimes when we talk to banks, they don't always have a clear outcome in mind. They don't always know exactly what they're trying to do with these deposits that they're trying to raise. And Dale and his team were very, very outcome focused from the very beginning. So we were able to, from the get-go, set very clear goals and basically determine how are we going to judge this project as successful. And, I think ultimately doing that allowed us to sort of hone in and focus on these, key performance indicators or KPIs that we could turn to post-launch and really determine whether or not this had been a successful project or not.
So I hope we'll get to the KPIs at the end, but first I want to ask you, Dale. It sounds like there were some personal relationships involved that helped us cement this relationship. But when you guys went out to look for a partner, were there specific criteria they were looking for that were important for you guys when you were looking for this type of partner?
I think the most important thing for me was two things. I think we as a community bank, we have to rely on our core at this time, which is Jack Henry. So a lot of our ultimate work product has to drive into our core seamlessly and to be efficient and ride the rails of the bigger bank that we have. So I also think it was important for the vendors to be core agnostic and have enough experiences that they could help us with the right questions so that we could provide, we have choices in our decisions so that we could understand the questions that were important in those KPIs that he referred to. So what our problem is that we don't know the right questions to ask in order to move a technology like this forward without someone to help us. And so MANTL especially was a great partner in that regard. And I would say everybody that was on our team, all the vendors that were on our team, played a pretty key role in that regard. And so that would be a characteristic of each of them.
Got it. And over to you, Nathaniel. It sounds like Midwest came with strong plans, and there was an aggressive timeline involved. What about from your perspective in terms of partnering with a bank that has roots and is a larger organization and may work at a different pace than you do? Were there ways that you guys were able to, I guess, quickly get on the same page, quickly adjust to one another's pace and cadence and stuff like that?
Yeah, honestly, I don't think there were really any issues from the get-go. I think we both sort of shared a common goal of moving quickly and moving agilely. And I think a testament to sort of what Dale has built at NBC, everyone was on board from the beginning. I think one of the things that made that possible, and something we honestly recommend to all of the banks that we work with, is just making sure to involve the key stakeholders at the very beginning, right? It's very important to get buy-in not only from your executive team, but also from the different departments, whether it's BSA or deposit operations or marketing and things like that. And I think the fact that they had all of those departments aligned and sort of ready to go from the very beginning, it made it a very seamless transition, and we were able to work very effectively. I think the other piece to it is, and Dale kind of brought this up, but we take a very consultative approach, right? When we work with our banks and really try to help them. And our job ultimately, and our product ultimately, is to provide the tools, right, for banks to grow core deposits online and also reduce costs. Those are the tools that we give them. We also give them data and information to make data-driven decisions, right? And I think that's really important, because oftentimes, and we experience this all the time, but banks and credit unions come to us with solutions, right? Not necessarily the problem. And the way the industry has sort of been set up historically is there are many technology vendors that will simply just build features for services that banks ask for, right? A bank says they want this thing, the technology vendor will say, cool, we'll charge you, X dollars a month, and we'll go build this exact thing. But the truth is, technology is only really useful when it generates outcomes and generates sort of the results that you're looking for, right? So I think focusing on these outcomes, understanding that at the end of the day, MANTL's success is measured by our bank partners, NBC's success, really allows us to guide our banking partners in the right direction. And I think what's very key to that is taking this consultative approach. That sometimes means, right, sort of pushing back and saying, all right, let's challenge the notion of, let's say, do you really need to collect a driver's license in the main flow, or can you ask for that for only high risk customers, right? And pointing them to things like, all right, really, what are your goals? What's the all-in cost of deposits that you want to raise? What is going to be the organizational impact on the bank? Things of that nature. So, I think really at the end of the day, like, our job is to help Dale and his team understand the trade-offs, understand the questions they should be asking, provide data and proof points for potentially each decision that they make, and setting that numerical target so that we can ultimately justify the ROI at the end of the day.
So interesting. So I guess, Dale, now's a good time. Could you talk about the new brand, the Rising brand, what it stands for, and I guess what your objectives were for sort of the first 12 months in that post-launch?
Sure. Our initial target was to generate 100 million in deposits in the first year. So that was our target from the very beginning when we engaged our partners. And that is really nothing other than looking at our constraint, which is our capital and our size. And we are a private bank, and we are not we do not have excess capital that we can just go out and get like a public institution. And so we have to build our process within our capital growth, and that is a limitation. It's a limitation that is good and bad.
Mm-hmm.
And so, but nevertheless, it really kind of drives our growth strategies. And so the brand itself is an interesting task, because we went out saying we want to do a new brand, and then you have to find the right name, the right approach. And so Missouri has an unusual law that says if a bank has existed in the last 50 years in the state of Missouri, you can't use that name. So you all of a sudden have a whole lot of names that you can't use
on the sidelines, right?
Exactly. And then when you go out to the internet and you start looking for potential names, I mean, you come up with a long list, and you and you and you slowly start checking them off that you can't use them because they've either been recently used or they're currently in use. And our goal is we wanted to make sure that we copyrighted ourselves and documented it because we wanted that national presence. So what it came back to actually was in the Midwest Bank Center marketing, we had a tagline called "Rising Together." In other words, it's something that we do. We want our customers to rise together with us. And all of a sudden, the word "rising" popped out of that tagline. And so quickly, as we went through the internet, and we had an attorney help us with the search, we found out that Rising Bank is probably a good name. And it actually aligns with our MBC taglines and some of the marketing that we've done in that space also. So it was unique how we went out to look at all different places, and we came back somewhere close to, who we really are already. And so then one of our other vendors, Synchron, helped us with the graphics and the logo, and they were another great partner, a lot like MANTL, in that they really provided good consultation, and we ended up with great visuals, a great structured website. And so the brand really, I don't want to say was by happenstance, but it's not unusual where you go and look all around the world for something, and you come back and it's really kind of right in your back door at times. And so but that's really how it happened, and we were really happy it worked out that way, because it kind of helps us build our story on both sides of our business, and they complement each other.
That is a great story, the traveling around the world to come back to home. Nathaniel, can you talk a bit about, you mentioned, helping to set KPIs. Can you talk about what was important to measure from the onset? And if you had some feedback into, whether you've hit those metrics or how it's performing, that would be really interesting as well.
Yeah, definitely. So I think the Midwest Bank Center objectives when we kind of started the project were the following. Number one was to replace wholesale funding, and I think they had a goal of $100 million of deposits in year one. They wanted to upgrade their tech of their legacy bank and build that competency internally. They also wanted to avoid cannibalizing the current customer base, given sort of the high interest rate savings and CD strategy that they were implementing with Rising. And they also wanted to attract a younger demographic, right? And I think, yeah, would you agree that those were the objectives at the beginning of the project?
Absolutely.
Cool. So, I think just talking to number one, right, they raised 75% of that goal in 10 weeks, right?
Wow.
And really got to that $100 million number in 5 months. They ended up slowing down their marketing. They probably could have hit the 100% of the goal in 12 weeks, but given how successful it was, they were able to slow that down. I believe they ended the year about 30% above goal, right? Which I think is pretty powerful. And what that ultimately created was a predictable way to raise core deposits at a lower cost than what the wholesale funding produced, right? So I think there was a big check there. I also think, and Dale, you can correct me if I'm wrong, but they got really comfortable with opening accounts online and got the company really comfortable. And I think the plan is to eventually roll that out to their traditional brand and leverage some of the things they were doing online with the Rising Bank brand, but also through the NBC traditional brand. And they took a really interesting strategy with marketing as well, right? So basically we geo-fenced all of the marketing outside of the sort of St. Louis or Missouri area. So the vast majority of customers that were opening accounts actually were not from Missouri, right, at the end of the day. And just to the last point, I think they ended up with about 6% of all new accounts came from, people, I want to say under the age of 25, something of that nature, which for them was, a pretty significant increase to what they were seeing. Other than that, and I think the things that we focus on from a like product level, right? And when we sort of say, all right, what do you need from an account opening vendor? I think you have to have the following, right? You have to have a sub 5-minute account opening experience. I believe people are opening accounts in a minute on MBC, but the average was probably closer to like 2.5. I think conversion rates are really, really important. And we were seeing significantly higher conversion rates on the sort of savings and CD products. And we were seeing, oftentimes when banks are using some of the legacy vendors. Customer experience is paramount, especially in this new world where, everyone sort of wants that Amazon-like or Facebook-like experience. And you have to realize that this is the first touch in many ways that an end customer has with the rising bank brand, right? They want to see a modern experience. They do not want to see a 50 question form that has a ton of ins and outs. I need to upload documents, things of that nature. They want something that's seamless because that's what the neobanks are giving their customers. And any friction that's introduced is going to lead to drop off, right? And then I just think that the last piece of it is, automation in the back end, specifically around KYC and AML, that allows you to really scale the business while not needing to necessarily scale headcount and operations in the back office. And you need to do all these things while still preventing fraud at the end of the day, right? So I think those were some of the main sort of like product KPIs just layered on top of the sort of objectives that Dale and his team had set out from the beginning.
That's super informative. In the time we have remaining, Dale, can you talk about, I guess, you're into this partnership, you hit and surpassed some of your initial objectives. Where are you looking to take the partnership in the future?
It's we are, as I said, we set up this mini laboratory to kind of learn how to do business in this space. And so our first, we opened up checking accounts in the third quarter last year using MANTL, and we have plans at this point in the next 60 to 90 days to start using MANTL on the MBC side for online account opening also. So we've learned how to do it, we understand it, and we want our existing customer base to do it. Now they'll have a different product set because, as Nathaniel said, we've tried to geofence that second brand outside the state of Missouri, but we want to deliver that same customer experience to our existing customers. So we plan to have additional loan products in the new brand. And I would say this is that we've recently also on the MBC side implemented a new mortgage portal called Blend. And in that negotiation, we've included the fact that we want Blend to create a portal on the Rising Bank side under that different brand. And that is included in that effort. So we've installed it on the MBC side. We'll have mortgages, home equities, automobile loans on the Rising Bank side soon also. So this is not just a deposit play. It is a play to learn how to do business in this environment. We have a pure marketing capability of having everybody's cell phone numbers, everybody's email addresses, and it's a very efficient environment to do that type of marketing when you have 100% of your customer base available. We don't have that available on the MBC side. And so I think our goal is to try and learn how to improve the data points on the MBC side as we learn how to do business in these different spaces. But it's not just going to be one way. We'll have other things that happen on the MBC side that we bring over to Rising Bank. But one of the most important things is we have this environment that we can actually test and understand how it works in that space, so that we can help have a clear path to the ultimate goal. So it's a project in motion. It's not over. we're just in the first inning of the 9-inning baseball game. And we've got a long way to go, but we're really happy with where we're at.
Dale, Nathaniel, I wanted to thank both of you for joining us on the podcast today, and also congratulations for winning our Bank Fintech Partnership Award for digital transformation.
Awesome. Thanks for having us.
Thanks. Appreciate it.